Abhav. I welcome all of you to today's session of Market Movers, in which we will talk about the downturn which is becoming apparent in the Dow Jones Industrial Average. If you consider the mood in the equity segment of the financial markets, it's a bit on the tepid side. We saw almost choppy momentum in European trading session, and as the US session is getting underway, we are likely to see same kind of situation prevail in most part of US session. Of course, the bias remains on the downside, and after the sharp sell-off in the second half of last week, we are in pretty much the bearish territory for almost all the three key equity indices for US, and I am expecting for this week the things to remain on the bearish side, and it will be the opportunity to look for short selling trades in coming sessions, including today's. If you consider the trading context for the day, we have these data which has been released so far. So during the earlier hours of the day, during European trading session, we got these IFO business climate numbers, and now, for the month of July, we have a release which is a tad better than the prior month, and which is a good sign, and it is showing that at least business people are feeling more confident, and some of the credit also goes to the fact that to large extent the coronavirus outbreak has been brought in control in the Germany, and that has aided this uptake in the business climate sentiment in the Germany. Just a while back, we got the durable goods order for the United States, and here also we are seeing some uptick. But this data is for the month of July, and the fact is that the base was pretty low for the month of May, and you can say that this might be the effect of low base, so we have to keep that in mind. But nonetheless, the reading is better than the prior month. Sorry, not prior month. Actually, in prior month we had a sharp increase of 15.1 month, but still it's in expansion zone, and the figures are little better than the expectations. And also on the political front, the your Republicans senators are scheduled to release the draft for new coronavirus relief package. So we will also need to watch out for the details emerging from those bill. So let's see how and how the Senate responds to these new proposals. Now, moving on to the technical outlook, let's start with the Dow Jones Industrial Average, and then we will turn our attention to the Euro USD, which has been on a stellar ride in today's session, and it has crossed above 1.17 levels in almost 2 years. Now let's start with the Dow Jones Industrial Average technical outlook. This is the daily time frame chart, and this consolidation, and then this sell off closer to 2700 zone, just little below this prior swing high, is kind of indicative of the fact that the steam might be running out of this rally in the Dow Jones Industrial Average, which has lasted for more than 3 months, starting from a little above 18,000 and rallying higher by almost 50% to 27,600, and then this extended period of consolidation, and again there is upward momentum. But as the things are getting challenging both on the geopolitical front as well as the internal situation in the United States, I think this rally which we have seen, which excluded confidence in the sharp recovery of the economy, is likely to stall, and maybe now onwards the mood might shift to sideways to bearish, and that's what we are betting on. Of course, never and nothing is ever certain in the financial markets, but still the probability looks high that we are pretty much headed for a bearish session in most part of this week. So here, if you consider this pivot point series, but this month we have this twice rejection of the Dow Jones Industrial Average around the price zone of 27,200. Here the first resistance of this month stands at 27,446, and we saw just a little below that this reversal happening, and we have here double top kind of formation now. And in Friday's session the sell off was apparently pretty sharp, and now in today's session mostly the consolidation is going on after starting on the lower side around 26,400. And here, though we are not exactly in bearish territory, as the price action is still above this central pivot point for this month, which is there around 26,000, so that might limit our losses, but still the outlook remains choppy to bearish, and let's see what can be uh, done in today's session or maybe in coming session. So here I would say that it will be better if we continue to look for short selling opportunity, and for that the ideal entry point would be anywhere in the price band of 26,600 to 26,800, but that is a pretty price wide band. And here in early hours of US session we are already seeing some selling pressure here. So I think we can indeed go for a short sell trade anywhere close to 26,600, but the thing is that stop loss will need to be kept wider nonetheless. So here the stop loss will come around 27,000 zone, so 27,000 to 27,100 should be good enough for the stop loss. And of course that increases risk, but the situation here looks indeed promising. Or maybe if you are not willing to take that much risk, you can wait it out, and as I said, the price band of 26,600 to 26,800. So if fortunately if we get any entry closer to this 26,800 price zone, so then also the opportunity will be there to go for fresh sell trade, and in that scenario the stop loss would be low, and of course the risk is going to be limited because of a sharp stop loss. And on the lower side we can indeed wait for even 26,000 levels to be reached in coming sessions. So broadly speaking, we will have a risk reward ratio which will be even better than 1 is to 2. Now moving on to the currency segment, here we will see the Euro USD technical outlook. This is the daily time frame chart, and this long bar you can see is indicative of the fact that today's session started close to 1.16, and now we are seeing Euro trade above 1.17, and the day's high so far stands at 1.176. So we have already seen almost 100 pips movement in today's session. And if you consider this daily time frame chart, here you can draw this first leg of this upward momentum after this long consolidation for more than a month. And then if we take out this Fibonacci expansion, then the 100% expansion works even beyond 1.18, and this price zone of 61.8% Fibonacci expansion of its prior rally also now stands broken, and I am expecting it to act as a near-term support in a coming session. And of course I am not really advising going in for a fresh trade straight away. As the things stand, things are pretty volatile in the Euro USD, so it's not a good idea to look for a fresh buy trade or even fresh contra trend trades like selling. I would especially suggest that we should prefer to stay away for some time. Maybe we allow it to consolidate in today's session, and then we can take the help of these crucial indicators, which will also help us figure out what can be the optimum entry and exit point. So here we have this third resistance of this month's pivot point series, which now stands broken. But it will be interesting to see if the price action is able to sustain itself above this third resistance. Otherwise, it is likely to act as a near-term resistance and might provide some reason for Euro USD bulls to take rest and consolidate before moving on the either side. So we have to keep this in mind, and we will have to be cautious while going for any trade, which will be in the form of a with the trend, as we have to see. I think this consolidation, which we have already seen around 1.16, does indeed provide good opportunities for fresh trading on the long side, but that's far away, and we have already seen these sharp moves on the upside, and that makes our job pretty difficult, as we have to wait it out till we see the price action converging at least closer to this 50 SMA, and that stands almost 100 pips away. So because of that, in today's session, I would say that it's better to sit on the sidelines in the Euro USD and see if by tomorrow's session, if we see convergence of 50 SMA and this price action, if that happens, then I think as long as the Euro USD is trading above this immediate consolidation zone closer to 1.16, there is no reason not to believe that Euro USD will continue to rise in foreseeable future. When I mean foreseeable, that means most part of this week. And of course, I'm not a oracle, so we are not talking in terms of a longer time frame here. The mandate is for a short to medium term perspective, and I'm sticking to that. And from that perspective, I feel that the price zone of 1.16 is going to be crucial in near term trading outlook in Euro USD. So watch out for that. With that, the session is coming to an end, and if any of you have any query or any idea to share, you can write it in the comment section. And also, before you take the risk of trading in the financial instrument, you should also remember that there is a substantial risk involved in financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.